The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the wonderful Wednesday, the February 19th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We begin our day with the mixed bag. The mix, most indices trading on the downside. For example, Dow's down 142, S&P's off 6, NASDAQ's down 51, Russell's off 12, Trandies are off 235, the semis are up 33 points. We've got gold that is trading up. It's trading off $3 at $29.46. Silver's down 30 pennies. Trade at 33.07. Light sweet crude is up 64 cents. Natural gas is up 20 pennies. High grade copper is down 2 cents out there. If we take a look at some TD9 counts, we've got a completion of a TD9 count in the XLK. Yesterday was bar number 9. Today we'll complete this pattern. Now, the XLK yesterday closed inside its all-time swing point high. It did it with light volume, is my recollection. So the swing point we're looking at here is January 24th. The volume on that session was 3.3 million shares. Yesterday, we closed into it with just under a little over 3 million. This was 3.3. So it's still lighter volume, but it sure seems like it wants to push up and test that high being 242.58. But you're going to get a TD9 count top that's going to go ahead and complete today. What should then happen is we should see price pull back to test at least the first level of support. That would be its oscillator and change line, currently in the 237s, 237.46 on my screen as we speak right now. That's for the daily time frame. If we look at a weekly time frame out here, we're pushing into a Rhodes Momentum Indicator top. In order for that to be negated, we would need to see a close above where it's going to be. It's going to be this high. It's going to be the trading session of January 10th, the week of the 10th, that is, and that's at 241.06. So we're going to want to watch that come week's end out there. But there, you're up at resistance on the daily. You're up at resistance on the weekly. Now, the monthly is going to be interesting because if it closes above the high from July of 2024, 238.14, and negates its TD9 count and Rhodes Momentum Indicator top out there. That's what's going on with regard to the XLK. If you look at the top 8 NDX stocks, you've got NVIDIA. That formed bar number 9 yesterday. We discussed that. It's going to complete just like the XLK. It's going to go ahead and complete a TD9 count top. Very similar outcome here, except its level of support to the downside, because it's trading with inside its profile, is at 135.76. So to the downside target, 135.76 would target number 1. Target number 2 would be 132.49. That's a daily oscillator and change line. Don't hold me to the 49 cents. That's going to change. And then the third level would be a move to the breakout area. This is a TD9 count top that sets up a breakout level at 120.76, one step at a time. Now, if price were to close above yesterday's high, not necessarily today, In fact, not today, tomorrow or further. That high being 143.44. It negates the TD9 count top and says that we had higher. You can see on the weekly chart, you've got prices rallied right up into resistance or close to it. 144.09 is the number. That is the weekly oscillator unchanged line out there. So that's on NVIDIA. I don't think I have anything else out here, but I think my recollection was the SMHs, not the SOX, but the SMHs were also forming a TD9 count pattern. I don't have that in the, I don't have that in my arsenal on the left-hand side of items, but let's just see if Stevie's memory is any good. Probably it's not. And it really isn't, but in this instance, it happens to be right. So for Stevie, that was called a lucky guess out there. So you had a completed TD9 count top yesterday for the semis. And we're going to take a look at the SOXX. That was asked for. Again, there's different instruments in these things. So if you take a look at the semis, SMH, the SMH is out there. If price closes above 257.20, that was yesterday's high. We're 257.21 right now. If we close above 257.20 at day's end, it negates that signal, talks about a strong upward momentum move for the daily time frame. That would then suggest, at least to all of us out there, that price is going to go ahead and close the gap. And to close the gap, it just needs to target 260.62. That would be the low from January 24th out there. So that's what's going on with the SMHs. Just as an example, I'll put in the SOX index here. This is disregard the profile levels that show up out there. Those are the black dashed lines on my screen. We're just going to see if this is also in a TD9 count, and it is not. So there's my memory. So you do not have any kind of a topping signal inside of the semiconductor index, but we do for the SMHs, an ETF that has got a lot of semis in that. So this suggesting that price should move higher. But so keep this in mind as you take a look at the SMHs out there. So that's what's going on there. If we take a look at the the daily equity future contracts, just take a look at their charting patterns. You can see here you've got the ES mini, no topping signal on this rally. Price remains above its oscillator and change line. That's a bullish signal. That suggests a run for 61.6225. Here in the NQ, we're trading above profile and oscillator and change line resistance out there. We've seen a series of higher lows. Today so far is also a higher low. It's trading, though, what it did yesterday and what it's doing right now, though, it is testing and rejecting. Oh, I take that back. The swing point that it is testing is from December the 6th. Let me just make sure of this. Let me just doubly check out here. Yeah, so the swing point high is actually from December the 16th. And the range on that is anywhere from 22,050 up to 22,450 out there. And as long as price remains inside that swing point, odds favor it's going to go push and at least test that high at 22,450 out there. That's what's going on with regard to the NQ. With regard to the Dow Equity Future contract, just consolidated with inside its daily profile, support at 44,374. It has resistance at a descending trend line, and above that is the top of its profile at 45,227. And lastly, if you take a look at the Russell 2000, also a sideways consolidation within its profile. 2265 is support, 2337 is resistance out there. So we get back from this break here. We're going to take a look at natural gas. We're going to take a look at natural gas both for the March contract, which is expiring here in the next day or so. And then we'll take a look at the April contract. On the March contract, you can see prices attained a 1-to-1 A to B equals CD pattern. But we'll finish that review when we get back from this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Dow's off 141, S&P down 3, NASDAQ 100 off 24, and the Russell is down 11. Let's go take a look at natural gas for the March contract. You can see the A to B equals CD pattern prices attain the 1-to-1 level. What that tells us is that if there is a bearish reversal candle that forms, that will identify a sell the D point top. But we also know about the daily time frame. A to B equals CD pattern is prices traveling along the left side of that C to D leg. This suggests that this will do more than a 1-to-1 A to B equals CD. It really doesn't matter what that next price projection level is. This just tells us this should do more than a 1-to-1. But the next bearish reversal candle would be the candle that would identify a sell the D point top and a retracement back towards the first level of support, which would likely be its oscillator and change line, unless there would be a new profile that forms out there. But that's the March contract. You've got on the weekly time frame, it very much looks like a TD9 count top will get negated this week. It's got the same A to B equals CD pattern in there, so we don't need to put that up there. And the monthly chart is looking really, really good. Now, that is the March contract for natural gas. If we go take a look at the April contract here, you'll see an A to B equals CD pattern, but you'll see that the A to B equals CD pattern has not been attained just yet. In order to attain that, it needs to get up to about the $4.24 mark. On a weekly basis, you're going to get a TD9 count pattern that's going to get negated, so that's a bullish signal. We can see that price is along the left side of that C to D leg, so this too should do more than a 1-to-1 A to B equals CD pattern to the upside. There's also a wave number 7 signal that is in place out here. That means the next lower high would confirm that top, and that could send price back to its oscillator and change line, currently at $3.70 out there. If we look at the monthly time frame chart for natural gas, Ron, what it's doing right now is it's testing the low of its swing point. This on a monthly basis, that takes us back to September of 2022. And that's at $4.16, 4.168 to be exact out there. The question is price going to close above that? is it going to do with volume or not with volume? Is it a test rejection of that level? I don't know the answer to that question, but that's what's going on with regard to the April contract for natural gas out here. So watch for a daily bullish or bearish reversal candle. That would identify a top. Short of that, pressure continue to move lower, but recognize that at this 416 level out there, the bottom of that swing point from back in 2022, that could be a resistance level. That's what's going on as I take a look at natural gas. Hope that helped you out with both those contracts. You also wanted to take a look at the gold contract, daily, weekly, and monthly time frame. So here's Goldilocks. Now, gold has a daily TD9 count top that is still in place out there. We can see that it formed in the bar following bar number 9. That was the February 11th candle. That high is the key threshold out there at 29.6850. If price were to close above it, not spike above it, but close above it, it negates that signal and would suggest we move higher. There's a daily top that is in place. There is a weekly top that is in place. Silver formed a bearish shooting star candle last week. There's a Rhodes momentum indicator signal that's been triggered, so that's got a top. Now, usually shooting star candles either work or they don't. In this instance here, it is not working, but the top still stays in place out there on a weekly basis. And we look at the monthly time frame chart. Even if I put up the continuous contract, we are in bar number 8 of a TD9 count top to the upside. This is going to be because we got the month ends next month, like we're going to be bar number 2 of a rally to the upside. So this says that we could see a retracement. You could see a 2-month retracement here. 2 bars to the upside. Sometimes you get 1 or 2 bars to the downside out there. Now, not that we can't do a 3rd bar to the upside. We can see that the last 2 monthly rallies, let me take that back. The last 3 monthly rallies, and I don't even have the continuous contract up, each have been a 3-month rally out there. If that's going to take place, we're going to see the weekly Rhodes momentum indicator top, the daily TD9 count top fail out there. But I will say this is a time to be cautious with regard to gold out there. I don't have my black background charts up to show you. We did not make new all-time highs yesterday in any of the major currencies. We did, though, in 2 of the Middle Eastern currencies, the Iranian rial and the Syrian pound out there, which is kind of questionable because, when I say questionable, what it suggests to me, or it could suggest to us, is that maybe things aren't going so smooth over in the Middle East out there. Because why were those 2 hitting new all-time highs yesterday? I realize it was somewhat currency related as well as the rally that we had in gold, but still, those were the only 2 new highs that were made. I say still time to be cautious with regard to gold. So, Ron, I hope that helped you out both with natural gas and gold. Let's move on to Caterpillar. This is for Joe D inside the Tigers Den. We take a look at Cat. Cat is pulling back into a swing point out here from back in January 10th. That swing point low, 349.80. The low we've hit today, 349.88. The volume today, 485,000 contracts. Let's call it 500. Let's call it about 1.5 million share a day, going into a swing point that has volume of 2.7 million shares. Caterpillar pulling back with lighter volume. Now, what you really want to see this do is get below 349.80 and close back above it. That would be your test and rejection of Caterpillar on a daily basis. If you can't bust them to the downside, maybe it busts them to the upside. If it's going to bust them to the upside, you should see some kind of sign of strength coming off of the bottom, if in fact that is a bottom. Because what it could be is we could be setting up an A to B equals CD pattern to the downside. A weekly close below 349.80 will in fact do that. Now, the volume there on the weekly base was 7.8 million shares so far for the week. Let's say we're halfway through. It's about 3.7. Let's call it 4 million shares. So let's say it's 8 million shares. 8 million pushing against 7.8. So you're pushing into that weekly swing point. That would trigger a small A to B equals CD pattern to the downside. But what that would tell us here with regard to Caterpillar, Joe, is we're down below profile support on the daily, we're down below profile support on the weekly, and inside the monthly chart, that A to B equals CD that I would draw in would take us down towards the buy zone of Caterpillar. So what it looks like to Stevie, when we take a look at its charts, the message of the markets, It looks like it wants to. Now, we won't get confirmation of what I'm about to say unless we get price that closes below that January 10th low, and that's at the 349.80. And what I'm about to say is Caterpillar looks like it's going to go ahead for the buy zone on that monthly time frame. And that's between 318.20 and 329.34. So I hope that helped you out, Joe. Let's go take a look at what Gray Rock wants to look at, and Gray wants to look at BBAI. We take a look at the charts here for BBAI on a daily time frame. You've got a TD9 count top. The bar following bar number 9. Price right now is sitting at the center of its profile. It's a fairly equally balanced profile. So buyers and sellers believe this is where fair value is in between the range of 615 and 970. We're sitting at 792, and we're sitting right at it. Price closes below 792. It opens up the door for BBAI to move back to 615. If we're closed below 615, 378 would be on the horizon. Now, what we can see on the weekly time frame chart, no topping pattern, but the daily is controlling the movement of price right now, so that's one to really keep your eye on. Weekly support for BBAI is at 565. Monthly time frame, nothing, everything looks good there. So it's really just a daily time frame, sitting at potential support as we speak right now. Watch 792. Again, if you close below that, you're likely headed to 615. Lastly, you wanted to put up SOUN. Let's see if we can get to this here before the end of the break. SOUN. It's got a daily confirmed A to B equals CD pattern to the downside. Should take us towards the 445 level. We have a confirmed A to B equals CD pattern to the downside on the weekly time frame. So again, confirmed A to B equals CD patterns at downside. So this looks like it wants to go target the 445-ish level out there. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Still Dow off 128, S&P down 2, NASDAQ 100 off 22, and the Russell's down 7 points. Let's get to our next request out here, which is ASPN. We take a look at ASPN. The question is, where is potential support? Potential support is going to come on the weekly time frame, and that's a TD9 count breakout level at $7.17 out there. You can see we're trading below daily profile, weekly profile, monthly profile. Let me populate this monthly chart here out there. Right in bar number 6 to the downside. So that's your level of support. I don't even see, well, I see there's a weekly A to B equals CD pattern. We're beyond the 1 to 2 level out there. So a bullish reversal candle theoretically would identify a buy the D point pattern out there. Bullish reversal candle on the daily time frame would confirm a Rhodes momentum indicator bottom. So short of that, price looks like it wants to head lower, and I would say that price target is about 717 out there. That would be your next area of support. Let's take a look at the next request, which is to take a look at Nike. NKE is a ticker symbol. Here, when we take a look at Nike, now Nike on a monthly time frame, Dan, I don't know if you knew this. You probably did, so I'm going to share with you something that you already know, which is there is a confirmed monthly A to B equals CD pattern to the downside. The swing point, which was a TD9 count bottom in October of 2022, had volume of 200 million shares. When it was passed in July of 2024 out here, and the volume there was 306 million shares. So Nike has a confirmed A to B equals CD pattern that takes us down, into that 33, 36-ish type area out there. Now, the weekly time frame chart, actually today, or this week, not this, well, right now, as of right now, I won't know until Friday, but price gapped up, and that gap up, as long as that holds, confirms a weekly Rhodes momentum indicator bottom. Now, price is trading into, it's a slightly bearish structured weekly profile, Dan, between 76, looks like maybe 94, 84, 76, 84, and 8009. That's your resistance zone. That's your sell zone out there. Now, the daily's got a different A to B equals CD pattern, obviously, than the monthly out there, but it also has a confirmed A to B equals CD pattern to the downside. The price projection on this one, this A to B equals CD, would get us down towards 63.05. And yet on the other hand, so that's one pattern that's out there. The other pattern is that it has a profile change in trend. It closed above its profile back on February 13th, and ever since then has been above that profile, and that suggests that price might want to target the next resistance level. It won't negate this A to B equals CD pattern to the downside. The next resistance level, as you can see, is a daily TD9 count top that formed on January 31st out there, and then there's another TD9 count topping pattern out here that's got the TD9 count breakdown level at $79. So you might see a rally inside of Nike. You wouldn't be surprised to see a rally up towards that $79 level. But longer term, Nike is looking like it really wants lower price. Now, you can watch the 130-minute time frame chart. It's going to go ahead and confirm a TD9 count top at 1140. So 6 minutes from now, 130 minutes later, it will complete that pattern. 65-minute time frame chart has a completed TD9 count top. That says watch 75.79. If price closes below that, should get to 74.84. No topping pattern. Maybe there's an A to B equals CD on the 30. I'm not going to spend my time taking a look at that. We don't really need to, but that's what we see. We take a look at these charts here for a Nike out there. So likely to rally further, potentially further, run into resistance, start resuming that further move lower to eventually get us down into that 33, 34, 35, 36 level out there. So that was Nike. ELO wanted to take a look at ticker symbol ADI. So let's pull up ADI, see what this is doing. And on a daily basis, this is trading above its TD9 count breakdown level. So that's a beautiful move out here. And that level is at 226.04. So where's the next level of resistance? Turns out it's the top of the weekly profile. So ELO, ADI should make a run for the 237.03 level. Let me open up this chart and see if this is inside its swing point. I believe that it is. So it is trading inside a swing point that was a Rhodes momentum indicator top from July 19th. July 19th of 2024. The volume on that trading week was 15 million shares. We're halfway in, and we've done 11.5 million shares. Price is moving into that swing point with volume. Now, ELO, you've got resistance, no doubt, at 237.03. And if price closes the week inside the swing point, that just requires a close above 230.74. It really suggests that it should make its way up to 244.14 out there. And we take a look at the monthly time frame chart. It has a TD9 count top. Looks like that's going to be attacked. That has volume in July of 2024. 68 million shares. So far for the month, we've got 45 million shares. So weekly is strong. Monthly, maybe a bit weak out there. So a little bit of mixed signals. Price is above all resistance levels on the monthly chart. That says it wants to go attack that TD9 count top out there. And I think more likely than not, that's really the message of ADI. Let's go take a look at SOXX. That is for Duncan Steve inside the Tiger's Den. And here what we'll see with SOXX, again, different than the SMHs. The SMHs had a TD9 count top. The SOXX ETF does not. The SOXX traded above, we see a series of higher lows, higher highs. It should go target its sell zone. And the sell zone isn't too far above where we're at. We're at 229.89. And the sell zone begins between 230.94 and 235.87. If you look at the weekly time frame chart, the semis, this SOXX, I should say, has been consolidated with inside its profile for quite some time. When I say quite some time, this profile began back in December of December 2024 out there. Maybe not quite some time, but at least for a few months. Resistance here is at 234.15. And on the monthly time frame chart for the semi SOXX, what you've got is a TD9 count, Rhodes momentum indicator top, price just trading sideways, but running up towards a key resistance area in the 233 and change level out there. So you're running into resistance on the monthly. You're about to head into the sell zone on the daily time frame, and you've got profile resistance at 234.15. There's nothing on the charts to suggest that SOXX, Duncan, doesn't want to start to want to continue to make a move into those resistance levels out there. So I hope that helps you out. The next request that you had was to take a look at the Broadcom, AVGO. Broadcom has a TD9 count top. It should take price back to support. That first level of support is at 222.91. The second level of support is at 213.51. The weekly time frame does not have a topping pattern. It's just a consolidation with inside profile. That range is between 214.14 and 251.88. And on a monthly time frame, no topping pattern. A trade above resistance. This suggests that price should continue to move higher. Well, the competition for that is the daily time frame chart. And that daily time frame chart is really suggests that it wants to head back towards that 222.91, maybe even 213.51. So that's what we see, Steve-O, when we take a look at AVGO and SOXX. Thanks so much for your request. We come back from this from this breakout there. I think we're looking at AIFF, TLT, IBRX, ENVX, and SBLK. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. AIFF is what we're looking at. This is pulled back there right now. It's sitting here right at a potential buy spot. That is its green oscillator and change line. I don't see a daily top out there. Maybe there was an A to B equals CD pattern, and then a gap to the downside a couple days ago would have confirmed that top. But it's sitting at potential support. The next level of support, if 802 fails, would be 447 out there. The resistance level is clearly at $9 even, Steve, and that is the top of the monthly profile. That's what we see when we take a look at AIFF. I didn't write down who had that request, but hopefully there's some good information there with that oscillator and change line on the daily time frame being potential support. ELO wanted to take a look at the TLT. The TLT actually has got a little bit of an island bottom out here, but I don't really think that has any meaning, if you will. Right now, what it's dealing with here is it's dealing with resistance. That's its red oscillator and change line. Remember, red oscillator and change line tells us we have a price oscillator that is falling below, that is below zero, and when price is below, that is falling below zero. So it's taken on a key level, and that's at 88.09. No idea where it will close the day. Whichever side it closes on is likely the side that it will travel to next, meaning a further rally or a further decline out there. Support, by the way, would be the top of its profile, and that's at 86.98. When we look at a weekly time frame, here we can see prices testing support. It's inside its profile. If price were to close below 87.88, that would increase the odds of a move to 85.89 out there. Now, that's the TLT. Let's just put up the 30-year Treasury. Now, we're still in the March contract out here. Well, that didn't work. Let's try that again here. Stevie, ZB 0325. And let's get these charts pulled up here. Should have done that earlier. My apology for not doing that. I seem to recall looking at the 30-year Treasury yesterday and not really having a good feel for it. We're not seeing anything substantially different here, but this is really the underlying instrument. And we can see a consolidation on the daily time frame between its profiles. It's also dealing with that red oscillator and change line. So not really much more for me to provide to you, ELO. I do hope that that information helped you out. Dan wanted to look at IBRX. So let's pull those charts up on our screen, see what that is doing. Trading out right now at 404, a nice little rally. Trading above daily profile resistance, which was at 343. It's trading with inside a gap to the downside, but price should go ahead and fill that gap, and it should make its way up to its TD9 count breakdown resistance level. So IBRX trade at 404 should rally towards 485. That's going to be the next resistance point out there. Above that would be a resistance zone, and that resistance zone would be courtesy of the monthly time frame. So that sell zone exists between 503 and 581, and that is the likely target. Well, the first target is 485. If price gets above that, the 503 to 581 level. The monthly time frame chart has a wave number 7 bottom. That's been confirmed. It has a buy the D point pattern. That has been confirmed. It has a weekly profile change in trend. That has been confirmed. Everything says rally ho out there. So 485 is likely the next destination for IBRX. Bob in Spokane wants to take a look at ENVX out here. So let's pull its charts up, see what we've got. You've got ENVX trading right now with inside its daily profile. It is testing the support of that profile, and that's down at the price point of $10.99. A close below $10.99 would suggest we have lower price. Now, we're testing support on the daily time frame. That was the bottom of its profile. We're testing support on the weekly time frame, and that is its green oscillator and change line. That is 1106. So you have 1106 as support, and you have 1099. A close below 1099 is then going to suggest a move to 1014. A close below 1014 is going to suggest a move to 841 out there. Now, price is trading into a daily swing point from back on February 12. The volume there was 5.7 million shares. So far today, in 2 hours of trading, 2.4 million shares. So price is trading into the swing point with volume. That adds the idea that a close below profile support, I believe that number was 1099. If you close below 1099, you're going to go test that low from February 12th out there, and that low being 1025 out there. Now, you could also trigger an A to B equals CD pattern to the downside. All that is needed is a close below the low from January 13th out there. Of course, we really want to close below the low out here from February 12th, but that low that you're looking at from January 13th had 7.2 million shares. So if you close below that with more than 7.2, you'll get a confirmed A to B equals CD pattern to the downside out there. The weekly chart, as I mentioned, or maybe I did mention it, it is testing support. That's its oscillator and change line, consolidating with inside its profile. That's between the range of 841 to 1274. And lastly, you have a consolidation on the monthly basis between profile support at 989 and resistance up at 1612. Bob, you say earnings are out tonight. Is there a tell that we have here? There's not a great tell, except that price is pushing into that swing point with volume, that daily swing point. So I believe if you get a close below 1099 today, it's suggesting that price wants to move lower. But that's the message from the daily time frame chart. The weekly time frame chart says, well, so far support is held, which is that 1084 level out there. That is the best that Stevie can do with his eyes. So I hope that that helps you out with regard to ENVX. We're going to go take a look at the SBLK, and that is for McGuppy inside the Tiger's Den. He has a very simple question based on today's pullback out there, which I believe was a response to earnings, if I'm not mistaken. Said respond out well. It's yes, okay. The question is buy, sell, or hold out here. Well, you're trading back inside the profile. You are trading below its red oscillator and change line, but you're within the profile, so it's not a sell per se. And the buy zone, the buy zone is between 1430 and 1487. Profile buy zone is between 1458 and 1487. The breakout level of support is down at 1430. From a volume standpoint, the swing point that is trading into, which formed that Rhodes Momentum Indicator bottom, McGuppy, was a trading session of January 23rd. So as it was moving off that bottom, it had 1.8 million shares. Right now, what it's doing, it has done 4.4 million shares out there. So the number that you really want to watch is going to be 1489. 1489 is the top of that swing point. If you close below 1489, it's going to do with volume. It's got other areas of potential support, but it's signaling to you that it wants to go make a run for that bullish engulfing bull sash candle that formed that Rhodes momentum indicator bottom. So again, it's going to be a battle to get down there, and that battle is going to be at 1487, 1480, and then finally 1430 out there. Now, if you close below 1430, you're going to negate a wave number 7. You're going to negate a Rhodes momentum indicator bottom, both for the daily and the weekly time frame, and that would tell you're headed lower. Now, if you look at the monthly time frame chart, the swing point or the B point of an A to B equals CD had 22 million shares, July of 2023. 22 million shares was passed with 49 million shares. Star Bulk Carriers out there has got a confirmed monthly A to B equals CD pattern to the downside. Now, this here, let me just move this over to the weekly swing point, and that would give you a price projection down at about $10 out there. It's actually a little bit less than $10. So that's what's going on inside of Star Bulk Carriers out there. McGuppy, I hope that helps you out. That was the last request as we went into basically the final furlough of today's show. So I'll figure out what's best to look at, unless there is some other requests that I've overlooked. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. If we take a look at Intel out here, INTC is a ticker symbol. You can see this thing gap down, so to speak, really gap down this morning after a stellar day yesterday. This is just an inside bar. We're trading inside of yesterday's candle. It typically what that means is that the direction that it came from will continue out there. But the level that you really want to watch, because we may not come to Intel for the rest of the week, is going to be the high from the week of November 8th out there. And that's your swing point resistance. That is at the price point of 26.43. Volume there was 438 million shares. So far for the week, 376. So we're halfway through. We're certainly pushing into that swing point with volume. A close above that, that's going to tell us that you had higher. If it doesn't take that out, well, it says that you should get back up there to test it again. It again being 26.43. But that's the real level. If price closes above that, that'll tell you that you're back off the races inside of Intel. Let's take a quick peek in on the ES Mini, see what we have going on here right now. First, see if there's any topping signals. The first topping signal that shows up is the 10-minute TD9 count pattern that's going to go ahead and complete at 12 noon. It's doing it right at TD9 count breakdown resistance at 61.5225. What should unfold? Well, in lieu of any new profiles that form, price should pull back to test 61.41. Now, the benefit here is that the high of the pattern, and I don't know if it's the bar that we're in right now, I won't know because it doesn't close till noon, but whatever the high of the pattern is, if price closes above that high at a 10-minute bar, the pattern will fill and will tell you about a strong upward momentum move for its 10-minute time frame chart. And that's important because I don't see any other topping patterns out here. I just see price trading with inside of profile levels out here, resistance on the 2-hour chart, its oscillator and change line, not necessarily stiff resistance. The 60-minute says I want to get up to 61.56. The 30-minute says I want to rally further. The 15-minute is doing the same thing. So just watch that 10-minute ES Mini out there. Let me see if the NQ is doing the same thing. I don't know that this chart will populate before I say bid you farewell, which is in about 20 seconds out here. But the screen will be populated, so if you're watching on Tiger TV, here comes the 10-minute chart right now. Come on, we can do it. Come on. What do you got? Finish it off for us. Where are we at in the count? Come on. Come on. Bar no, or TD9 count, not till 12:10.